Investors and traders, welcome to the channel Market Chart Pattern. Today we'll be taking a look at the key US stocks that we have been following in this segment. This video is for educational purposes only and it is not a financial advice. What we are looking at is the daily chart of Apple. So I'm going to spend a little bit more time on Apple than usual just for this video. So guys, what we are looking at is that Apple had formed this big one-to-one projection A, B, C, D labeled here. Now the price was it didn't exactly reach the D point, but it was close enough, within about $2.5 on a $120 stock. And also we have this channel formation here. So there was a confluence of things coming together to give us an idea that perhaps it was um, a good point for a potential bounce and a potential bottom in the stock. And we also had a smaller ABCD coming lower, but price was strong enough and it never went into this zone. Okay guys, so what we also want to point out is that ever since our initial target was $150 per share level that was met a long time ago, and I'm going to delete that now. Price then went into a consolidation, so it went into a range. It went lower. There was a support area here, and then broke out of the range finally, and now it's testing this upper boundary of between 78.6% Fibonacci retracement and 1.272 expansion of this swing here. What is also important to know is something that here we have this black line, and what I've done is I've drawn to get an idea of the time taken from peak to peak, and it is this much shown by the black line. And if I just clone it, so copy and paste, and we project it from here, from this top here, what we see is we also get into this area right here. So I'm going to delete this black line because I've already done this with this red line here, and we get into this region here. And what we have seen is that this region time wise on the price axis is right at the 78.6% Fibonacci retracement and 1.272 expansion. And what we are seeing now is actually a retest of this today. And I believe there was some fundamental news out perhaps today or yesterday, where Apple has actually done a partnership with Goldman Sachs for the card they have launched. I believe it's called Marcus. Don't quote me on that one. And I think is offering some sort of a interest rate as well. So at the open, there was a lot of activity in this stock, and the stock was up. The high reached was $167.41. However, it closed at $166.47. Still quite strong. So perhaps this could it be a double top formation here? We don't know. We have to wait and see for the further price confirmation. But looking at the price pattern and also the timing coming in, we have to pay really close attention to what is happening with the what is likely to happen with the Apple stock. And if there is going to be a pullback into Apple, and because of its weightage in the indices, particularly Dow Jones, which is a price weighted index, there could be a impact on major indices as well. So just to recap on this, on the weekly level, we do have a higher level coming in around $171 per share level, where it's gonna go and challenge the peak or the top right back into the 15th August 2022. Ultimately, all the stock is doing is it's just moving into this massive trading range, which has been formed since December 2021, and the stock is actually after testing the bottom of the range and formed a double bottom here. It's now testing the upper end of the range. So guys, now let's go and take a look at Microsoft. So here we go, Microsoft. So this pattern formation in yellow, which we had discussed in the previous video, I will put a link towards the end of this video to the previous video. I'm not going to go into detail of this. So far what the price is doing is just consolidating here. In fact, today was a negative day, and we're just watching the price action. It's right at the 1.618 expansion, $290 per share level. That was also our target. This $277 per share level was met long time ago. I'm going to delete that now. And here we also have on the left hand side structural resistance present. So 100, 290 to $295 per share level. This is all kind of a resistance zone. Let me actually draw it like this. So it is, boom, there we go. And let's move on to Amazon. So this is daily chart of Amazon.com, and here again, because Amazon, although there is technology component involved in this because of the AWS, Amazon Web Services, it is still classified as a discretionary stock because of the retail component. And the price is, it formed this ABCD pattern here. We were looking for some support coming around this level of 102. That failed. Then what it did is just went right back to around 78.6% Fibonacci retracement of its entire swing from bottom of around 80 to somewhere around 114. And here, what this stock is doing is still above this brown line. We think it might be moving in an ABCD formation higher, although it's not very convincing, but we'll still keep it here for now. And what this stock is doing is, it's pretty much at the 61.8% Fibonacci retracement. There we go. And yeah, it's in this resistance zone. So it's possible that what it is doing is maybe there's sort of this H kind of pattern being formed where the price is, if I try to draw it like this, oops, it is here. Well, let me actually do it like this. So it's forming some sort of an arch formation here. And if the price, goes below this brown line, then we could actually, in fact, have a one-to-one to the downside possible as well because of the resistance coming in from 61.8% Fibonacci retracement and breaking the structural low here. Then let's move to Tesla. So for weeks and weeks and months, we have been looking at the $200 per share level as a key pattern formation because of the number of Fibonacci retracements coming together. And the good thing is that if you have been following our videos, previous videos, we had been actually talking a lot about this bearish symmetry. So the bearish symmetry was broken, but it's now at a really key resistance level. It really needs to break $210 per share level to be able to move higher. So what might be happening is that this yellow pattern drawn here, price might actually be in this one-to-one ABCD pattern here, and could move to about $153, maybe even $145 per share level, and also close this gap here. If it breaks the $210 per share level, then it could be in an ABCD one-to-one projection higher. But unless the $210 per share level is taken out, it remains in this trading range, and perhaps actually might be in this ABCD formation moving lower. Okay, guys, so let's take a look at now Netflix. So Netflix is the new stock that we have started to follow, and I believe there was some earnings that came out today. Nothing too much of a wild action here, and maybe tomorrow at the open we'll see on the after hours trading how did it do. Just to recap, let me actually go back a little bit like this, zoom out. So what we are looking at is basically from the all-time highs reached. That was back in November of 2021. The prices retraced back to this 38.2% Fibonacci retracement. It's a pretty significant resistance level. And here what is possible is that, if it breaks the lows of this trading range, then we are looking at this one-to-one ABC formation lower. which could actually see the price move you know much lower, perhaps even to $226 per share level, which is the 1.618 projection of this. But anywhere between $273 is to be also watched really, really carefully. Um, and if it breaks the upper boundary of this trading range, then we could have another pattern of one-to-one projection A, B, C, D, taking the stock much higher, filling in this gap. But for now, I think the stock remains range bound, and it could remain range bound for quite a long time. This is how ranges normally play out. Let's take a look at the stock Meta. So Meta has done well. For a long time, we were looking for the $200 per share level. Finally, we got that. The price has moved higher, and now it'll be, maybe the price might begin to pull back from here just because the move has been extended so much. But the taking over this $200 per share level was a good move for Meta. So that's all we are watching in Meta for now. Let's take a look at Roblox. So in Roblox case, what we think is, but we're not sure. What we think is we might have this big ABCD pattern where the price can go to $58 per share level to about $60 per share level. Now, in order to be able to reach that level, there are a number of resistance levels that the price need to, overcome. So one of the levels that we had identified was this zone right here, and this is exactly what the stock has done. It's found pretty good resistance here. I don't know, some sort of news came out here, and that was yesterday actually, and the stock has been down quite a lot. It seems to be just 2 days price action. Maybe it's just consolidating here. There's a possibility, let's take a look at the retracement levels from here to here. So yeah, there you go. So the stock actually went right to the 38.2% Fibonacci retracement. I'm gonna draw it like this, and also right 0.382, which is a pretty good support level, right? Here we go. Here we go. Pretty good support level. Here we go. Now what is happening is, yeah, we'll have to watch a little bit more of the price action, and price could be, if it's find support here, maybe it's going to go and take another push to the upside here. The next resistance level come around from the structure here around $52 $53 per share level, and after taking that over, then further targets the deep point, and even this level of about $62 $61 per share level might be achievable. So this is what we are watching in the key stocks that we follow in this segment. If you like our analysis, how we look at the market using Fibonacci retracements and also pattern recognition, then please do subscribe to the channel. And if you found the good value from an educational perspective in the video, then please do like the video as well. And that way I'll know that people like the videos, and it just encourages me to keep on making more videos for you guys for educational purposes. So thank you very much for watching the video. Good luck and good trading.